Hello, hello, hello. Let's get the microphone test out of the way early here. Well, not really early. We got about a minute till we're going to get rolling. Go ahead and let me know if you can hear me across the various streams that are going on now, including YouTube, for those of you that are watching publicly. And then we'll jump right into it. All right, so we're going to get the music under control now that we got the microphone check out of the way here. And we'll get rolling into today's analysis. Hello and welcome to Landy's Crypto Corner and to our Friday live analysis live stream. And we are going to be taking a look at Bitcoin here on the daily. We'll also look at the weekly for CME, see where the close is coming in terms of the pivot, and what to expect when it opens back up on Sunday. Excuse me. Already having trouble with my voice here. My apologies. We'll take a look at Dixie as it appears to be trying to set a daily low. And of course, traditional markets are pulling back a bit here as Bitcoin continues to push higher here. Looking at the daily chart, we can see that that Bitcoin has tapped on that upper second standard deviation. And we'll actually go use the Bitcoin in 60 seconds chart, as the most recent video didn't get a ton of views. It was actually a little bit lower than normal. So I think most of the audience may have missed it. It is at a new time, so the algorithm really isn't picking it up. So that's fine. But if you do miss the YouTube version, you can always check on x.com, or formerly known as Twitter. And you can find me at CryptoLandy there. And I also upload the Bitcoin in 60 seconds videos there. I had noted that in yesterday's video, if Bitcoin closes back above the upper second, and or I would say trades above it, it did trade above it briefly today. That's coming in at around 37,400. It was around 37,3 to 4. Kind of give it a range as it oscillates around as price moves until we see the close come in. But if we do see that area traded above, and especially closed above, I would look back to this weekly here at 37.7, to the wick high at 38K, and then I'd keep an eye on the monthly at 38.5, to the weekly just above at around $39,000 to $40,000. And we see that the upper third standard deviation is right in between those two ever important levels above this weekly at 37.7. So I would be looking for continuation and a little bit of re-expansion, as we are starting to see expansion again as Bitcoin is trading and closing candles back above the upper first standard deviation. We're starting to see the lower standard deviations catch up, and each one of them in a pretty important area. And that would be the basis band just below the weekly here at 34,750, right in this monthly weekly zone, where that monthly is coming in at $35,000. We had a nice, nice bit of resistance here after swinging it back here earlier this month. Kind of went sideways, holding that weekly and monthly level close, and getting a nice close open Sunday into Monday this week. And then a push up to the levels that we had previously talked about last week, and I believe even the week before a little bit. So not unexpected, and it wouldn't be unexpected to see this get continuation to the next monthly here at 38,500, to the weeklies above at 39 to 40K. If we did see a breakout above there, that would be a little unexpected without a bit more consolidation. But we do have a target up there of around $41,800 to $42,000. We're going to take a look at this on the longer term timeframes, as well as it does line up with some important areas in the macro picture. But that would be the upside. Now, if Bitcoin does lose this weekly at 30, this would be 36,200. right around that upper first standard deviation. You can give it room down to around $36,000 on lower term time frames. If we do see a daily close below there, though, I would start looking back to this monthly area at that $35,000 to the basis and weekly level at 34,750. Below there, the lower first standard deviation is coming into a pretty important zone at around 33,200. And realistically, I'd like to see that lower first around this wick low at 33.4. And I do suspect that we're going to get that maybe a little bit higher at close today. Below there, if we did see that breakdown, the big important level there would be the untested daily support resistance area at 32,400. And then the tested area that was only tested once, and this is at 31.8 by the lower second standard deviation. This would be considered a bullish retest if it did get there to test that area. And that is a daily, weekly, and monthly close open structure there from the breakdown to new lows where we saw our low at $15,500 come in. So looks good. I mean, Bitcoin looks good to keep continuing to the upside here. You know, sideways days, a little pullback here and there. Not out of the question, and would be perfectly normal from this particular standpoint, because we are seeing re-expansion of the Bollinger Bands, and we do see that Bitcoin is above that basis band. And as long as it stays above that basis band, and especially the upper first standard deviation of the Bollinger Bands, then we're going to see volatility continue to expand to the upside here. And this may not be reflected immediately in terms of compression to re-expansion on the bands themselves until we see a close above the upper second standard deviation again. If that were to happen, we would see aggressive re-expansion of the bands, likely pushing those upper targets. Now, where we would see a bit of a different look, and I will kind of caution bears and bulls on this one. So if you do see the lower first dropped, you're going to see volatility cool down, right? Because it would be mean reverting back to the basis. So that would be a technical cool down in terms of volatility, cooling down back to the 20 simple basis band of the Bollinger Bands. But because we have the moving average chasing by quite a bit, this would be considered a bullish scenario for Bitcoin. In this case, you know, Bitcoin could come all the way back down to that lower first area and still be heavily bullish, and even the lower second standard deviation down here at that 31.8. Yes, is it a big move from where it's trading now? Yes, but because that moving average is chasing in the manner that it is, that would be considered a bullish setup. Now, this could very easily change in the next few closures, but as it stands right now, volatility continues up, moving average is chasing. That does mean any mean reversion plays are likely to get picked up by the bulls. And if it were to just remain high volatility, hit the downside and close below that 31.8 level, that's where it would get bearish. So this would be very bearish, in fact, and I'd be looking somewhere around 30,600 at this weekly to 30,300 by the lower third standard deviation, and I wouldn't just be looking there. I would be targeting this 28K weekly down here over time, possibly even lower down to that monthly there at 27,200. That would be quite a big move. That'd be a $10,000 candle down, and I don't necessarily believe that that's in the cards right now, but you know, that remains to be seen. There isn't even a technical high put in just yet. So when we see a technical high put in, then we can come back and start evaluating what may happen. Now, when looking for a technical high, you know, I do want to see multiple drives of bearish divergence. We might start seeing one or two drives populate, and this would be meaning there's a technical high in. Yes, there is bearish divergence in the look of the RSI in terms of its strength right now, but no highs have been put in. That's why you don't see any of these triangles, downward facing triangles here to denote a high. Some indicators will call these highs, but they're not technical highs. We haven't seen, we've literally just seen closes being marked up. So, you know, we had 3 candle structure here. You know, come back down, but because it didn't break this close open over here, no technical high. Did not break down below this open here, no technical high. And it's just continuing on. So I do want to see three populated, 2 to 3, I should say, for a daily reversal. Otherwise, any bearish divergence that does populate from here is simply corrective, especially when looking at the structure as it's getting a little bit more parabolic. Is it overextended? Not yet. I'm seeing a lot of that, with the re-expansion, the compression to re-expansion. This looks just fine so far, and we can even check this on the weekly. And we're seeing that it's only just getting really rolling with expansion. So, it had its cooldown. Its cooldown was just a markup phase, close over close, day after day. So this is this is actually a really bullish scenario. Could it turn bearish? If it fails at some of these levels that it's at, sure. Yeah, it could turn bearish, but that's literally, a drop in the bucket. This is a very bullish move. And that bearish move that might develop out of it, if it were to put a high here at some of these really ever important levels, is simply corrective at this point. If we do see some of those bigger areas break down, specifically right now it's 31.8. For continuation, you want to see it closing above $35,000. For continuation to the upside sooner than later. It's already getting that continuation. So if we did see a pullback, you want to see 35 hold. If you want to be really bullish, 36.2 here at this weekly. And the upper first, that would be very, very bullish on any pullbacks. Below there, then it's the monthly, weekly area at 35 to 34,750. That's all perfectly fine. Still very bullish for continuation sooner rather than later if it were to pull back. Again, it's still just pushing up right now. And if it were to pull back further than that, it's still bullish above 31.8, although that is a very, very big move. You'll likely see a lot of bears start calling for all their huge downside targets. It's 2019 to 2020 all over again, yada, yada, yada. And that would be way too early to call any of that anyway, especially when looking at the monthly. When we look at the monthly, we have upside, posture on close over close Stoke, not a Stoke RSI. This is measuring close over close price action. So we'll put on the BA reverse Stoke panel here, and we can see that, right now 27,400 is the momentum pivot for the monthly. So if we did start seeing that 31.8 breakdown, I would exercise caution coming into the December monthly and possibly January. But right now, this is just all painting pressure up, continuation. I will remind you that we just had a 2-month close open, and that is pivoted at around 23,900, 23,800. So monthly, 2-month is pressure up. We got the quarterly that's going to get pressure up here, 24,400, 24,500 area. This is all pointing to moves to the upside. And while I have you, for all of you that are here, let's go ahead and take a look at what happens every time Bitcoin. This is, I've gone over this before, but it bears repeating. What happens every time Bitcoin closes above the upper second standard deviation on the monthly? Now, you can see that it can be a rejective area. So I do want you to be aware of that. Bitcoin is not above it. It's not threatening to close above it just yet. So we could see even, daily price action move into the upper second standard deviation on the monthly and reject. But what happens every time we get a closure? Well, first closure typically kicks off all of that expansion. This is not just Bitcoin. This is across, indices and assets in other markets. Anytime you see a monthly closing above the upper second standard deviation, and for those that have a long enough history close below the second standard deviation, you are looking for continuation. Typically, in Bitcoin's case, every time it's closed a monthly candle above the upper second, and it has run to a new all-time high. So we had our move off of the upper second, or upper first, close above the upper second in January of 2013. Got a nice high put in April of 2013. Nice sideways consolidation, and then another push up to a higher high yet again. After closing above, guess what? The upper second standard deviation. Then it pushed up to brand new highs in November of 2013. We scroll over here, we can see in 2016, first closure, we saw a first pass rejection at the upper second standard deviation on the monthly here in the candle of April. And so April 2016, we saw a move down below. And I'm going to get into some of my history as I've been trading Bitcoin for a long time, but at some point I'm going to get back into, I'll get back into some of my history for those that don't know it, of when I came into Bitcoin and started really trading it aggressively. I had been, I mined it years before when it was very young, but didn't understand the value of it. When it was very young, I'm not necessarily very young, but I didn't understand the value of it at the time. We see the first closure above come in May of 2016. And then boom, up to new all-time highs. Yes, it lost it, came back down to lower first support, but it had already kicked off, compression to expansion. And then it rode it all the way up until 2017, which was a beautiful, beautiful run. Then we had the very long bear market of 2018. Nice pump up. And guess what? Rejection at the upper second standard deviation. So this is something to be aware of, even if you are very, very uber bullish. We did see a monthly high put in this area. That high was locked in September of 2019. So anybody that told you that it was going to the moon right from there didn't understand that this high was put in, and it was a technical high. And once this low was broken on a close, it was likely, and that was at 74.31. We did see it close below on a 3-candle structure that failed at the upper first again. And this was something that I was screaming from the mountaintops. I actually had a very decent following, we'll say, on Twitter at the time. This was before they really started banning everyone for every little thing. And I was a little bit more political and vocal about it, and I got myself banned. But I was screaming from the rooftops that we needed to look out for a lower high. We got that and then dumped down, hit that lower first, ran the top side of the bear market bottom, and then lift off. And you'll note that it did come and head back up to that upper first, upper second area. And when it closed above the upper second, it also closed above the upper second here in October of 2020, and then new all-time high. Comes back down, flirts with the upper first here, makes new highs, slightly higher highs on the monthly, and then comes down into a long form accumulation. Didn't really get that parabolic blow off top that everybody was looking for, but this was a parabola on the monthly. And now we have a structure being built out. We've got, we have our low set, which is now confirmed as a macro low now that we put in this major low. Coming into October, confirmed this second major low. So 2 major lows next to each other creates a macro low on the lowest low. So this is a macro low down here. I highly doubt that this will be breached at any point in the future, at least in the relative near-term future. Maybe someday, you never know. Structures do change over time, but I highly doubt it. I highly doubt it. In fact, this is a very strong major low that was just put in. So, October really did solidify this all for me. I've been talking about this for many, many months prior, since the lows, that, it's nothing but a major low until we see, a lower high or a higher high and then a higher low. Well, we didn't get a higher high. We got a lower high to higher low. Once that lower high is taken out, we have a structure change, we have an uptrend, and we were more than likely, especially trading above the basis, once this candle was put in, headed to that upper first. That was already our main target. And then above there, the upper second standard deviation as the next main target, closing above the upper first. So Bitcoin could very easily reject the upper second standard deviation here, which is coming in at 38,400. I do suspect it's going to If price trades up to the $38,000 level, you're likely to see this right at this low at around 38.5 to 38.6. And if we do see a rejection there, it's not out of the ordinary. We've seen this many times, but it's not automatically bearish. We have seen rejections there that, come down, hold the upper first, and then close back above, thus kicking off aggressive expansion to the upside. So in this case, we're either going to see one of two things. We're going to see it trade and close below, which is fine. We'll see a rejection first pass. And that's not inherently bad right off the bat. We just evaluate, do we put in a high? It's got to come all the way back down to this candle. Quite honestly, it'd be endangering this low. It'd be highly unlikely, but not out of the question by any means. But from a statistical point of view, it'd be very unlikely. Or we're going to see it close above, thus kicking off aggressive expansion to the upside. We're already seeing expansion to the upside. So this is the other part of this that you need to understand. And that is that not only do we have bullish divergences all over the place, we have a BBWP confirmation. So we haven't seen, anything lower than what we've already seen in the past. But we'll just take the most recent examples because so many people want to compare what's going on right now to 2019. It's going to go make, lower lows than the most recent lows and go retest the macro low and so on and so forth, or lower. They're looking for 10 to 12K. Some are looking for 5 to 8. Ridiculous downside numbers that just aren't relevant. I mean, even if Bitcoin were to trade there, it's not relevant right now. And you can't trade that. You can't make that trade from right here. So it's just silly. It's not even worth talking about. If something changes in the future, then it's worth talking about, right? But right now, it's a bunch of BS, copium for those that got the calls incredibly wrong. And it's okay to be wrong. Markets will make you wrong a lot. It's just a matter of evaluating if you're wrong, why were you wrong, and what can you look at that might have what could you have looked at that might have changed your perspective. Therefore, you keep an eye on that going forward in the future. But then there's people that just don't do that, and that's fine too. But what we're really looking at here is the volatility level. So the last time that we saw volatility this low was back in July of 2020, all the way through August, September timeframe into October. And that was after the dump off in March. Okay. Now, the last time that we saw this volatility low, like this low, was at the highs. And it was when Bitcoin put in its high in 2021, its higher high, came back to the basis, it got a cool down, and then it got expansion down to the lower second standard deviation and held, and then expanded down, made a lower low, held that, and now we're in the structure that we see going on here. So realistically, Bitcoin above 26,100, it's fine, technically. Do you want to see it down there? Absolutely not. If you start seeing price closing below there, it's likely to put in a high on the monthly. And then we're looking for, a possible break of this low. And then a sideways consolidation or, a big move down to flush everybody out at 20K, which I highly doubt from here right now until we see something change. Okay. Right now, the probabilities and statistics are not in the bears' favor. They're in the bulls' favor, and they can cry about macroeconomics all they want. They can cry about structure. They can cry about overextension. They can cry about, I've counted my waves and this is the fifth wave. They can say all of these things. But until you see a high put in, until you see structural changes, none of it's relevant. None of it's tradable. And they can just basically, they are hollowing at the moon. They're screaming at the sun. And unfortunately, they're losing out on their trades. Especially if they are trading what they're expecting in the longer term, which is, quite frankly, silly. Now, could things change? Yes. I do want to exercise caution. I want to impart upon you that, yes, upper second standard deviations either act as continuation or reversal zones. Bitcoin is getting very close to it. If it first pass rejects, does that mean that 12K and 10K and 8K and 5K are the next targets? No, not even remotely. Does that mean that 26.5 incoming, man? No, not even remotely. Not until we see a structural change on a lower term time frame, like maybe a weekly. But the weekly right now has its higher low at 26,500. So unless the weekly retraces all the way back and closes below 26,500, which is a big move, that's a $10,000 weekly move from here. It's more than $10,000. Then we can start looking at this becoming bearish, but that would only be a trend break. That's not even a trend change. That's just a trend break. And the snapback would be hellacious for those bears that would be like cheering. And all over social media and all over crypto Twitter. Crypto X or whatever that you want to call it now. And really just, calling for those downside targets and getting most of their audience wrecked as they try to play the breakdown. And then it snaps right back in their face and they are no longer happy. All right. So look, if you're bearish on expansion on the weekly, then you might be not cut out for trading. Now, if we see a high put in and it confirms a high, then we can look for pullbacks that come down further. But until that happens, we have to look up. Just mathematically, we have to. I need to impart this upon you because I'm seeing a lot of real bad advice. I mean, like, it's hitting its peak. And on both sides, there's a lot of people that aren't exercising caution right now that should be exercising caution in some of these very important areas. And they are looking right past them. The upper second standard deviation on the monthly is no freaking joke. Okay. You've seen that there's been multiple times in Bitcoin's history where it has rejected from it, but only once have we seen it actually create a high that caused a reversal to lower lows on that monthly time frame. When it was in a contraction phase like what we see on the monthly now. So we can go back to that and just take a look. It's still in a contraction phase. So during this phase, you do have to be careful because we are not kicking off expansion of the Bollinger Bands just yet. Volatility is expanding within them, running from the lower second to the upper second, right? But first pass rejections are very, very likely at the upper second, even if it's just on those lower term timeframes below the monthly. But when that monthly gets closed above, that doesn't mean that it's immediate moon time. You still need to look up. It's right on this close open at 28,500. That's where this monthly upper second standard deviation is. That's exactly the area that we've been talking about. But then we just have to pay attention to structure. There is order blocks in here at around 43,000 to 47,000. There's the high over here at 45.5 to the wick high at 48. We have to be aware of structure. You don't throw that stuff out just because Bitcoin has done expansions past the upper second standard deviation and just marched on to new all-time highs. We still have to target all of the important areas above. Once those are broken, then we start looking for that expansion to expand in the next area. You just take it one step at a time. Do not skip steps when you are trading. Do not skip steps in your analysis. Don't just automatically assume that because if 38.5 gets regained, then it's moon time and it's going to go right to 69.9 or 69.420 or whatever the meme numbers are. That doesn't mean that is going to happen. But if it does, you shouldn't be surprised because volatility will pick up aggressively if we see closures above that upper second standard deviation. Just like if we see rejections there, don't automatically assume that 10K is imminent, because we would need to see a high put in. We need to see lower term time frame structure changes below the monthly. We need to see important support areas break down. And then we would need to see expansion to the downside in those lower term time frames that would match the look on our monthly time frames. So I really wanted to impress this upon you guys because we're going to be talking a lot about it in the coming weeks as we come into the close of this monthly and prepare for the quarterly close. All right. So keep an eye on that 38.5. We start cracking above that. I do think 39 to 40K is imminent. And then above there, 41.8 to 42K this weekly up here. All right. I don't really have too much more to say other than the daily is getting some re-expansion. If you do see closures above the upper second standard deviation on the daily, we will see aggressive re-expansion. So you will see the bands just split on both sides, upper second, upper third, start to really curl up, and you'll also see the lower second, lower third spike down. Most likely, lower second and lower third would come down to the 30,000 and under areas, and we'd see expansion of the upper second really begin to grind up against some of those upper targets that we talked about. All right, now the momentum pivot for the daily is 37,400, we'll call it. You know, Bitcoin's trading right around it. I'm not as concerned about the momentum right now. If you're going to be looking at this, keep an eye on the volatility metric. Again, pullbacks. Well, if we do see pullbacks from here and you see BBWP over the moving average and then you see it start to really bounce aggressively, that means that upside is still, especially if we see pullbacks that remain above the basis here, which is coming in at 34,600 or so. It's at 34,750 area on the weekly to $35,000. We see pullbacks back there. You'll see volatility come down a little bit of mean reversion. It'd be very bullish until we saw, the BBWP back under the moving average, which means that Bitcoin's closing consecutive candles around the basis to lower first area, between the upper first and lower first near that basis. That's where we'd see cool down that then would also beget a turn down in the moving average there. So, and if Bitcoin doesn't move over the weekend, we'll see a cool down as well, because the 20 simple is going to tick up towards price action, which will, in many cases will cause BBWP to slow down and stop, and then the moving average can catch up. So this is something to watch over the weekend. And then we'll pick up with it on Monday to see where things closed on the weekly, and on, what happened with volatility. So we'll follow up with that. Now for CME, man, what a beautiful march up on CME, holding that that upper first after holding the lower first down here. It's a thing of beauty. I love volatility, and it played it out perfectly. Expansion to the downside, rejection at the basis, come down, flirt with that lower second, lower first area, swing it, and then set a low there. Once it set a low here, ran to the upper first, hold the basis to lower first area, start expanding upwards or grinding price upwards, come back down by the upper second and third, even getting a closure above there. Come back down, hold the lower first, and then just boom up, close above the upper second, hold the upper first the entire time. It's a thing of beauty. This is also showing us here on the daily, expansion to the upside is lagging behind, in terms of closes, and so that therefore it's lagging behind on the BBWP and moving average. But as I've said many times in the past, because we see the basis moving up and we do see expansion maintaining, because we're seeing closures above the upper first, that's where you kind of see price knock around the upper first and upper second until we see the upper first break down on a close, put in a high, start breaking some of these lows and head towards the basis. That's when we'll see an actual volatility cool down. And that the upper second is at 39,315 right now. So likely to be around that $40,000 level. So another confluent price to go along with structure. We see 37,430 will turn momentum back to the upside on CME, and it's currently trading at 37,610. The weekly here, powerful. If it closes like this today, it's 3 hours and 21 minutes. BBWP is going to aggressively tick up, thus raising the floor basically by the upper first, rather, not lower, but the upper first here. I was so used to saying lower first because of where Bitcoin was trading for so long. But the upper first will be at 32,360, so around 32.4. We're likely to see this somewhere around the 33 to 33.5 area. The upper second is currently at 35.5 and closing above there today. Going to really kick that expansion to the upside. That's a thing of beauty right there, and you can see this reflected in Bitcoin's BBWP metric and on CME, as well as on spot price. It's pressure up, man. Like, can't fade this right now, and even on larger pullbacks to some of these bigger areas, upper first, in hell. I mean, even to go back and retest weekly supports at 30,000, or this is 31,120. We did not see the same type of look on Bitcoin spot, but we had the $31,000 area is a big one to the wick highs at 31.8, 32. Yeah, it's 32,165 here on CME, so there's that markup there. Even pullbacks back there are just bullish as hell. Breaking down below, even if it swings below, it'd still be bullish as it stands right now from the current look on BBWP and Bollinger Bands. Stoke is going to remain turned to the upside here on any closes above 30,261. This is going to aggressively move up, probably to around $31,000, maybe even higher. And, something to watch coming into the middle of the month. I would say that from the daily perspective, this move is probably starting to run out. Are we seeing the same look on the 5-day? 5-day is still at 29,626. And this is, the 5-day is more aggressive, man. The 5-day is saying that it wants to keep rolling to the upside here. And that's, that's a reclaim of these lows on the 5-day as well. It's pushing for CME. Yeah, it's pushing this order block before the breakdown, and that's at 40,500 on the wick and 39.9 on the close. If it recovers this little area, this order block, there's kind of double order blocks before the 5-day breakdown candle. The one right before it, though, I would say is the most relevant one at 39.9 to 40,500 or so. Above there, man, it's only a little bit further to 41.8 to 42K. Which is another order block area on this 5-day chart. There's also a weekly or a 5-day close just above there at 42,500, and it could just, might just go for the full on move up. There is a high. Okay, yeah, because there is a high here right around this order block zone. So again, we're getting all the same numbers. All the confluences are lining up. This is running a 58 over. It's 28% above the moving average here. So this has plenty of room to keep trying higher, even if it's just on a wick basis from the 5-day. I didn't realize the 5-day was so aggressive. And because this is closing, we're going to see the weekly be a little bit, the momentum pivot for the weekly is going to be closer than the 5-day, but the 5-day is a little bit more relevant as it is going to be closing in the middle of next week. So this is good for bulls. This is not bearish by any means. Of course, the monthly, we're looking at the same area on CME for the monthly. And, a reminder of what CME did right at the beginning of the Bollinger Band history here. Literally the first time that Bollinger Bands populate on CME because of the lag in the 20. So the 20 populates as a rejection of the upper second standard deviation. Come down, run that upper first, and then boom, up. So very, 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 very young in terms of how long CME has been trading Bitcoin here, relatively speaking. But this is just a beautiful structure, to be quite honest. There's nothing bearish about this. And, if it turns bearish, then it's got to drop 925 here on CME. I have my doubts that that's what we will be seeing. Pullbacks are expected, as long as it's above 25K, looking good. Hell, even above the lower first here at 19.5 still. That has not moved much. It will move at the end of this month, provided Bitcoin closes, here and higher, or anywhere really above the basis band. We're going to see this low side start to really aggressively pinch up. We're like right on the verge of it. So I do not want to get ahead of myself, and you should not get ahead of yourselves if you think that it's just going to moon. So just be logical about it. We've seen rejections here. We've seen swings of these areas. We saw one close and then boom up. So that's what you're going to be looking for, is close above the upper second. And we've seen in prior market cycles that it can still put in a high and swing that area even after closing above. But once that expansion's kicking off to the upside, it's you should be picking those pullbacks up. Not financial advice, but that's what should be going on. So, all right, a lot of time on Bitcoin today. I did feel that I needed to address kind of like this fever pitch narrative driven garbage that's being spewed out there into the ether with very little in the way of real analysis. It's mostly just opinion analysis and looking for absurd downside targets while Bitcoin's in a very nice daily parabolic move to the upside is just silly. Like, you could call for the end of it all you want, but until you actually see it starting to end, maybe you should, check yourself before you wreck yourself. I hope that at least one or two of those people watch this stream. I know that at least one of them does watch this stream. So, and they're not from any of the groups that I'm currently in. They're just from the public side of X or Twitter. And they were pretty aggressive with me in a conversation through DM about this move up and how wrong I was. And let's just say that it hit every one of my targets level by level, day by day, to a T. So, and it's not because I'm some kind of genius. It's because I'm paying attention to what's happening in price action, and I understand how price works and which levels to watch for. It's not hard. Anyone can do it. Even you. All right, so let's go ahead and take a look at Dixie. Dixie was threatening to did put in a low. Right? So we did see this low confirmed as of yesterday's candle. Realistically, I was not, this is a low. Technically, does it need to get back above the open here at 106.20? Yes, but it did trade back to the high here at 106.06. So it tested 106. This was expected. Now, the big thing to be aware of here is some of the lower term timeframes might pull back. But if they pull back into a bullish structure on the daily, for instance, if we do see lower term time frame pullbacks that can remain above the lower first standard deviation of the daily at 105.60, then I would be looking for it to try up further for the basis at, it's kind of already tried just shy of that at 106. So that'd be like, low 106 region to mid 106 region is kind of where I'd be looking next. And if it gets that's basis to upper first here. Above there, I'm looking for it to run this lower high over here. And it was technically a higher high to close. I would just call it generally, deep 106 to 107 area. Possibly that upper second standard deviation and the low 107s. Now, that's not immediately, I'm not going to immediately look for it to break out to the upside, but that is if it does hold this lower first. If it does lose it, keep it on that lower second coming in at 105 again. Only below there would I start looking for continuation to the most recent low at the upper 104 area at 104.84. Below there, then we can look for our 104.69 meme numbers. And then this low down here temporarily at 104.5, and then 104 even, which is over here. We've got the low 104 to 104 even area, and then my downside destination below there at 103.50. That's going to be the really important area to watch should Dixie get there. But it is starting to build some lows here. It's starting to build some mean reversion structure on the other side of this, as it can very easily get some bullish divergence populated here. You know, we do have it. This indicator isn't calling it out because the look back period for the actual divergence drawings here are not, I don't have it set far enough, as this was, late August, early September, and we're in November, and this is only looking back, I believe, 28 bars. So it's not going to pull any local bullish structure, but this is enough for it to pop it up. As it stands right now, you still want to see, not need to see. But if you want to see Dixie rise, what you're looking for is in trend bullish divergence, meaning the downtrend is creating this bullish divergence. So that's what you're going to be looking for next. We're not seeing that just yet. So I do think that if it pops up any higher than, 106.5, it's going to fail. And that's the upper first anyway. So I doubt from here right now that it could get there and above and be sustainable for further upside. But, there's always, I could be proven wrong. It is going to be pressured down below 105.28, and I believe it's trading well above there. So this is going to turn to the upside on the daily. We do see the 2-day is down below 106.02. It is trading below there, so the 2-day is still, pressured down through midweek next week. 3-day is closing with today's candle. That is pivoted at 106.61. So it is trading below there. It will below there still be pressured down. But as I've noted, it's pulling back into a bullish band structure. So even if it does get to the lower first at that 104, and a half to the upper 104 area where it already spiked, it's very likely to bounce before really changing any long-term structure. Unless it just hellaciously dumps down to the 103.50 area, in which case I would look for aggressive lower highs and then a downtrend to really get rolling on some of these longer term timeframes like the 3-day, 4-day, 5-day, and so on and so forth. Right now, this is simply a pullback into a bullish structure. I mean, the 5-day is telling you the story right here. I mean, this is a pullback into a bullish structure. So anyone that's telling you Dixie's just going to drop off the map is, maybe fooling themselves into seeing what they want to see. Is it pressure down on the longer term time frames? Monthly, we're looking at 102.69. Nice. Right? This was a tap on the basis. As it stands right now, I know the chart's a little hard on the eyes here right now. Let me go ahead and get rid of the horizontals and trend lines and so on and so forth real quick here. Look, I gotta just bring you back to structure. There's nothing wrong with this structure. We have a major low being set. We have a back test of the highs of that major low area. We have a compression on the monthly time frame. This is going to go one of two ways. All right. This is either going to put in another lower high, take out this lower low, start pushing that lower second standard deviation at 99.12, and then get expansion on the monthly to the downside. It's got to close below there to get that expansion. All right. Now, if we do start seeing this, though, close back above the upper first standard deviation, then we have to look to the upper second. If we see it close above, then it's aggressive expansion again to the upside. This is a freaking tight compression. This is setting up for a very tight compression, just so you know. It's right on the basis band. It could take a while, though, to actually do that. Now, from a structural point of view, this found support on the previous highs of 2020. Okay, so it found support right on the 2019 and 2020 highs. It then built out that support and broke out. It's going back for a retest. There is absolutely nothing wrong with this structure. Can it change? Is it still dangerous for Dixie? Absolutely, because if it puts in a lower high, starts closing back below this lower low, right? This lower low, lower high to this low rather. This is not a lower low. This is a higher low structure, and a good one at that, off the double bottom here in 2021. But in this case, we're looking at lower first rather at 102 below there. Then it's dangerous for Dixie, because if it starts too close below the lower second at any point, which will continue to move up towards price action at that 99.12 area, take out that wick low, that'd be a bearish reclaim of these highs. Then we're looking for aggressive downside. I mean, at minimum to the mid 90s, 94, 95, to retest the highs of the low down here and the low 90s to $93, and then possibly even $90 and further. Who knows? Never know. I am not seeing that right now. So this is simply a consolidation, and quite frankly, on the daily, a bullish pullback. And the weekly is supportive of that as well. So nice break of structure, come back, retest. It can even test a little bit lower. Now it's all about where those closes come in on the monthly and quarterly, because the quarterly is going to be the dangerous piece for Dixie here. And quite honestly, this is bullish on the quarterly. So even being stupidly dangerous, if it were to put in a lower high in the quarterly, we are looking, down to the 93 area at the lower first. And, to be fair, quarterly is turned to the downside here. Dixie will likely change structure, and then we come back to it over the longer term. But quarterly, we're talking years. Okay. So we got to see how the next quarter closes. It's already pointed to the downside. 112.50 is pressure down, likely keeping it in a sideways consolidation until we see something happen with the monthly here. If the monthly ticks up to the 103.5 region next month, and then we see it close below, we'll get the monthly tick back down. And then we're looking back to the low side structure at this major support area. And then we come back to it. Can't even call for a breakdown from there until we start seeing closes below. All right, that's Dixie. Be aware, it is putting in and put in a low. We are not seeing local divergences though. In trend divergences, bullish divergences, just your bullish divergence being a hidden bullish divergence from this low back here, but not really as relevant. You could even call this low and this low as well, but in this case, it's not as relevant as the in trend divergence building up. So what you want to see if you're bullish on Dixie is you want to see it come down, hold somewhere around the current lows, get a drive of bullish divergence, start getting multiple drives, just like on the highs. We need to see multiple drives of bearish divergence before we called for a reversal. We got that. And then you want to see that on that same look on the other side as well. So it's still pressure down. Let's look at gold. Okay, gold is violating some of the areas to the downside and hitting some of the targets that we had previously talked about. So it did come down and try to hold that lower first standard deviation. It is currently losing it. And that is at the 1946. Remember, I said 1953 was the big area, that this wick low. We see it close below. It's probably headed down to somewhere around this close open. And it's basically there at 1932. It spiked 1933.14. It's only got a little bit further. I do expect this area to get tested. We did see this high get hit. We're really looking for this high, which did get hit at 1933.20. And then the order block here. And the area to be aware of would be 1908 on the wick low there to 1920. Now, that would be, trading and closing below the lower second, which would be bearish, and I would start targeting around 1900 again. But this could act as a reversal area at that 1920 to 1925 area. So keep an eye on that. If you do see price start to head in that direction and or get there, 1994 is going to be the momentum pivot on the daily. It's got a ways to go to get there. I do think as soon as this starts to paint a low, we're going to see bullish divergence, obviously, from this area over here. It's not going to call it out explicitly, I don't think. Yeah, no. But it would be a valid drive bullish divergence. It's kind of like how Bitcoin has drives of bearish divergence, but they're not actionable because a high hasn't been put in. We need to see a low put in, then we would have at least one drive of hidden bullish divergence. And we didn't really get much on the way up, so do want to see that structure start to build. I know the 2-day is also turned. Basis band is right there at 1923. Again, 1920 to 1925 is the area that bulls want to see bounce. Otherwise, I do think things start to push below 1920. Things start to push down into the 1910 to 1900 area. Weekly mean reversion back to the basis, setting up a very large range. And what do you know? Below the basis is that 1900. This is 1893. Actually, it's about 1889. Actually, yeah, 1889, 1890 to 1900 is where the lower first is. So you do want to see closures maintained above the basis here. This, of course, needs to still put in a higher low to really solidify an uptrending structure here. This is nothing more than a trend break of this downtrend currently. If we do see a higher low put in, which of course can come anywhere above 1832, so it's got a lot of room to do it. We see a weekly higher low put in, then we can start looking for runs back to this most recent higher high trend break area at 2010, and then we start targeting that big area up there, 2015 to 2030 to 2040 area, and then above there the highs, and probably much further over time. As it stands right now, this is just a downtrend break, and we got to continue to watch price structure develop. Let's go ahead and weekly still pressure up. Any closures above 1827. It's at a 70 read. It's in the bullish control zone. I will let you know, most of the biggest moves you'll find in a lot of stuff when you're using a regular stoke is going to be often when it's hitting like right around the extremes, somewhere around the overbought and oversold zones are typically where you see some of the biggest moves. Not always, but typically that's where we do see them come in. So still looks fine for right now. Monthly is the thing that should scare the bulls on gold right now, on closures below 1934. So, messing around that area currently, bulls want to see closures above to really, and especially getting closures back above the upper first here at 1964. So 1934 and 1964 is what you want to see closed above on gold for continuation to the upside. And, to be fair, quarterly is all the way at 1870. That was kind of in danger for a little bit, but because of the wick low coming into the last quarter, I do think that's going to move down somewhere around the wick lows, and closing above there by the end of the year would start to look good. But more often than not with gold, it just spells more sideways. Now, granted, we got the markup, we got the Trump years markup on gold, right? Whether you like him or not doesn't really matter. Like gold marked up under his watch, so, and obviously the dude likes gold, and it made a lot of comments to that effect, and kind of governed that way when bringing the Fed under the purview of the Treasury at that time, and gold performed very well, but hit its ceiling pretty quickly as the market basically tried to counter trade what was going on. And in this case, in some cases they made good calls on the first spikes up, but that markup phase has lasted and survived past that presidency's, that term there. So that actually does show at least some encouraging things for gold's future. I don't know if it's going to get to those $3,000 and $4,000 targets people want. Maybe maybe we'll see what happens in 2024. if the quarterly can turn back up. Let's go ahead and look at traditional markets. We got our pullback. And, I spoke too soon because it was pulling back when I posted, the description of this video. But we got the pullback. There we go. It's back above the upper first. It's back above the overhead resistance. If it gets above 34,252, I'm looking for a markup to around 34.3 to 34,450 above there. The upper second at around 34.6. And then 35K, really. That's the next big area. 34.7 to 35K, I should say. Yeah, around these highs. Which the wick high came in at 35 up there. Looks good. It's, it did reclaim this low on a close. Oscillated around it, lost it, and it's regaining it now. Looks good. Is the daily done yet? $34,072. Nope, still pressure up. Weekly is going to be pressure up as well. This is very encouraging. 32,856. It is right up against the weekly basis band. Currently, if it does get above there, that's going to significantly raise our targets to the $35,000 region. So that's, again, it's the next big area, even on the daily, from what we can see in terms of expansion. It doesn't need to close there today, but at least in next week, you want to see it above the basis to start targeting that $35,000 area to 35.5 above it at the wick highs, I believe. That's 35.5. No, it's $35,070. Is it 35.5 up here? It should be the actual highs up here. So, if it does trade below this week's wick low, 33, 8 or so to 33.9, then I'd be looking for a larger pullback down to 33.4 to 5. Right now, looks good. We saw the nice pullback, and look at that. NASDAQ just powering on through. It closed above the basis last week. Looking to close above the upper first this week. It's already pushing the next big area at 15,500. Next area is going to be 15,620 or so, and then above there we're looking to the high structures around 15,700 to 15,800 by the upper second standard deviation, and then 16,000 rather, not 100, 16,000 above there. Looks very good. Closures above 14,531, looking great. Daily, is it extended? Yeah. Pull back to the upper first though. This is what I was referring to. Looking great. It pulled back in the early morning hours for me to the upper first again today, and it's making its way to the upper second. This is beautiful. This is beautiful. Next highs in sight, and might even get taken by close today here at 15,512. If it does take that, then we're looking to that 15,618. Looks very, very good. Love it. Love it. 15,300 is going to be the momentum pivot. It's trading above there. It's basically going to be right on top of its momentum pivot. Just like Dixie, you want to see in-trend bearish divergence develop to really start calling for a reversal. And we're not seeing that just yet. Pullbacks are fine, and I've mentioned this already. Pullbacks are gonna happen, and they should. We saw a pullback to a high put in, but it didn't pass 433 here on SPY, so it looks good. It's pushing this high. It's above it, in fact, at 438, and we're almost to our 440 target. And we've reclaimed the gap. So next big area is going to be 440 to 445 up there by the upper second standard deviation. If we do see this low dropped at any point at 433 to 432, then I'd be looking for, 430 to 425, possibly 420 down there. Looks good so far. Nothing wrong with this. I like it. I love it. I want some more of it. All right, so SPY threatening to close above the weekly basis, giving us the upside targets of that 450 and to 455 or so. I believe even 460 up there, 450 to 453 actually. And then the next highs are going to be around the 460 area by the upper second. So if it does close above the basis here by the end of day today at 438.72, then I would look, low side structure, just like we talked about on the daily, one step at a time, 440 to 445. Then we can start looking at 450 to 455 or so, and then 460 up there by the upper second. So I just want to note the upper first is at 450. It's likely going to stay sideways as well. If we do see the basis close below, both the upper first and the lower first are in play. Lower first would be 427 to 430. Just talked about that area. Below there would be a run right back to the lows around 420 to 415. I like what I'm seeing here. And everything broke. There we go. Weekly is good above 418.34. So basically above 420. Looks great. Looks like continuation to the upside. And it's really Dow that's right up against that basis. And Dow's always a little bit weaker and less aggressive, but it just kind of methodically plods along after the rest of the market just kind of moves in big ways. I did want to look at the weekly rejection on the 30 years. Yeah, so 30 years threatening to break down. In fact, there was auction did not go well the other day. 466. We're looking at running back to around 4.4 to 4.5%. That's just going to keep a lot of funds parked with the Fed, quite honestly. Nothing crazy, but I did want to check it. Counterpoint to that is the daily is trying to hold itself together. So if it can pop back up like 4 to 480 or 4.8% to 4.9%, then it's going to recover and probably keep moving up. But right now, quite the rejection on the weekly and threatening a breakdown. So don't want to fade those higher time frames in favor of the lower ones. But if the lower starts to break some of the structure on the higher term time frames, then we can start looking at, maybe fading the structure of the higher term. So, all right, let me get music back on, get the tunes back on. I need to cough really bad because my allergies are kicking up. So I'm going to turn on some music here and get that rolling again. I'm going to read the chat and then I'm going to take some questions. Maybe a few requests today. Maybe. We'll see. We'll see how things go. But I want to see if there's any questions about what we talked about today or comments. You disagree, let me know. You agree, let me know. Give me just a moment while I mute. Enjoy these tunes, and we'll turn on the degen chart for just a moment here. Yes, this is the degen chart. 30-second chart for complete degenerates. Here we go. Back in just a moment. Okay, I'm back. Let's see. So for you guys over there in the other chats that are not public, I I have a conference call with Jimmy later, so I will talk to you guys about all that stuff later. And if you have questions about this stream, just pose them to me there. I'm going to see what's going on in the public chats. Okay? Sound good? Awesome. Thank you guys. If you want to hang out and listen in, that's perfectly fine too. We've got quite a few people on YouTube over here. Don't know how many are chatting just yet. I got to get the chat box up. Yeah, let me come over here and take a look at YouTube. Hi, Cheryl, Jedi, Spin. Hello, Spin. It's been a while. Bobby, Sam, good to see you. No name. Yeah, I just replied to you. And then Cheryl and Bobby are chatting. Let's give me just a moment to read through these. You're in the green. Good being in the green. It always feels good being in the green, whether price is going up or down. Whether you're long or short, if you're in the green, you're doing well. Can't BTC be trying to set up a technical higher low instead of a high? Quarter looks as though it wants to set a higher low. 27. Yeah. No, I think I probably answered that question. You know, monthly is already a higher low. So it's an uptrend on the monthly. Quarterly should be there. I believe. Let's look at the quarterly. Yeah, I mean it's lower high to a higher low structure. I mean, if you're gonna put a swing chart on the quarterly, then it's a it was a higher low back at 15.5 on the quarterly. So I mean below 27, you're talking like the close open structure here, basically. That would put in a lower high. But from a technical point of view, this is just, you know, highs up here, the all-time high, and then swing low is the 15.5 on Coinbase, lower on derivatives. But this is looking to march to 40K, which is the upper first on the quarterly. That's really what this is painting. I mean, above there, it's basically 53 to 55,000. What was the close up here? Or I'm sorry, 46 to 55 by the upper second. So we're talking much bigger numbers because it is a quarterly. And then above there, it's the all-time high, and it would be expanding above the upper second as well. Right now, the quarterly is in mean reversion, so just understand that the quarterly isn't quite ready, but the monthly would kick that off. So let's go back to the DGen chart. I'll read a little bit more here. But it's uptrend. So to answer your question, it's already an uptrend on the monthly. We have a macro low in because of the last low that October solidified on the monthly. That's a higher low. That's a major low structure, thus solidifying the $15,500 low as the macro low. And it's in an uptrending structure now. So you want to see that structure maintained, even if it's, you know, sideways consolidation from here on out. Slightly lower lows would probably cause divergence as well. And we'd see like a 2020 scenario, but it's not, as I went through and kind of showed you, that's not what we're seeing. We're not seeing anything else match up. So I hope that answers your question. But yes, I would also be expecting a massive move long term. I haven't seen it in a while, so I don't know if you picked if you picked up on any of the other stuff that I'd been talking about with the monthly. So I'm glad that I covered that today. All right, Jedi narrating his life, I think, for a moment. Thank you for hanging out and listening in, though. All right, Bobby wants 2 stocks, FTNT and Roll, bouncing off the 200, off the weekly 200s. I might have some time to look at those. Give me a second. Lenny should host a radio show. You know, why are these out of order? If I look over here, I see them in order, that you posted them with the timestamps, and then over here it's out of order. I have done a little radio. I would not say say no to doing it again. Sam says hi. Cheryl says hi to everybody. This is up. No name. I already replied to you. And yes, I was ranting a bit. But it was in the context of TA that's valuable for everyone to listen to. Solana's just doing its thing, popping up because BTC is. Solana's getting to some of the important areas we've talked about, around $50. 50, if it's above 50, like 3, I think. It closes there on the weekly, then we can start looking further up on the weekly. I'll look at it in a second. Then we'll do a few here. I don't have too many questions. Yeah, dedicated video is what it's going to be, Bobby. So Bobby says, can we get a dedicated set? Because I've done it in between streams many times over and over again. But, so Bobby's asking, hey, maybe one day can we get a dedicated trend, how to define trend and trend breaks and reading trend overall, as that is the first pillar of trading. Is trend, then support and resistance, volatility, and those three combine to make momentum. So yes, I'm gonna have either a dedicated video or I can do a live stream and then cut that out and make it a dedicated video. We'll see. It's coming. Cheryl missed my ranting. Yeah, it's in the beginning. Not for me specifically, for the new guys. And okay, yeah, because Bobby's in another group as well and I don't think they are a public group, but they are people who are also trading, and they get new people quite often. Yeah. And Spin says, thanks, Landy. I've been buying spot BTC for the past couple of weeks. Looking up. You were good to do so, sir. And I would say on any major pullbacks from here, buy more. But that's not financial advice. That's what I would say if I were to say that. But I did say that. But it's not financial advice. You must do your own research. But yeah, good trades. I also purchased more spot on the last major low. And I spoke with all of you about that at the time on this here live stream. All right, so let's go ahead and go in order. I'll take a look at Solana. We'll take a look at, because they're stocks, I got to look at them. I mean, I never get requests for stocks anymore. So let's go ahead and look at, what did he want here? FTNT. Fortinet. Oh, okay. I know Fortinet. The 30-second chart's a little gappy, so let's not look at that. Let's go to the daily. Oh dear. I must fix this. That was quite a gap down, so this was around earnings. They missed by a bit, but not anything too crazy. Or the revenue they missed, earnings they were fine. What's it looking like on the weekly? It could have another drive down, but that wick low looks pretty good where it's at. The problem I have with this is that it's still, is it expanding? We have to actually pull out BBWP here. Yeah, it's expanding, but this could fail if it does bounce aggressively next week. Look, I mean, it could retest $45, and if it breaks down below the wick low at 44.12, it's likely running this next wick low. Now, the one thing I will say is that the prior weekly closed above this really important support level. So, and that's at 47. Excuse me. I mean, it's been freaking up only for a long time. I suspect that the longer term time frames are probably ready to cool down a bit. Although, to be fair, it has been going sideways basically since it got into this range. Did make higher highs, but essentially since breaking above 42.65, which is in June 2021. So maybe the longer term time frames have cooled down. This is a nice big move up to mean reversion. This looks like it's just going to do like a really long form accumulation, to be quite honest. Below 42.61, and this thing's dropping like a freaking rock down to like $30. 25 to $30, but I would say, you know, weekly looks good to turn up here pretty soon. Coming off that lower second, maybe it gives another drive down. But $47, as long as it's closing this weekly above there, it's going to turn up. What's the 2 week looking like? It's going to close with the next weekly. 53.29. So here's what I would say. If by next week, because the 2 weeks at 53.29, if by next week's closure, next Friday, if this can recover anywhere above the weekly lower first standard deviation at 53 to $54, I would look to 55 to 56 and this breakdown wick high. Above there, I'd be looking for it to run right back to the basis at like 60 to 62 to around 65 to $66 at this lower high. If it takes that out, it's probably going to run 70 to $72 by the upper first and then run its most recent high at 80. That's what I'm looking at. Now, we do need to check the monthly because the monthly is down facing at $80. But so if it does run its most recent pivot, you know, if it gets back to $80 on the weekly, starts closing above there, obviously this would set a low on the monthly, and then we're looking for momentum to turn back up. We'd be looking for this to, you know, possibly become either a higher low, solidify this as a macro low, local macro low. What's the quarterly looking like? That's the big one. 58.83. This thing's going to turn to the upside. It is currently trading below there, so that's what we need to watch coming into the end of the year. Daily's probably begging for a bounce from here, but it doesn't look very strong unless it can close today above 50.36. So it is above there currently. I'd watch how it closes today. And then if it can get above 51.69, the lower first, which is going to move down. It's going to move down most likely to this wick high. If it can break out above this most recent wick high at 51.34, then I would be looking for it to fill this gap and then come back to it later. That gap's somewhere around 55 to $56. Let's go ahead and look at the other one you had. ROL. Rollins. Is this the correct one? You're looking New York Stock Exchange, right? Is it Rollins? If it's a foreign exchange, it's I just got to search for it, but I'll be honest with you, this looks like it's up against resistance. So unless it breaks out above like $40 or to $40, and even then, that's right up against these lows over here. This is likely to come back down and try to reset a bit, and Stoke is getting up there. 38.17 is the momentum pivot. Momentum pivot, it is trying for a 3-candle low here, so it could push to about $40. If it fails to break $40, 39 to $40, there's these lows over here, then you got the lows slightly above it. and it still needs to get this low right here. So there's 3 major lows in this area. 1, 2, 3. It's likely to find heavy resistance around 39 to 40 bucks. It could even swing above it, but I do suspect this is going to come back down anywhere below this last wick low at 37.61, and it's probably going to head back to the basis at 36 bucks. Maybe even try gap fill down by the lower first at 34.5 or so, and then come back to it. Dailies, could it push through? I mean, 2 days probably headed up, 3 days probably headed up, so on and so forth. Yeah, it's getting kind of critical though. So 3 days looking okay. So I would look for some mean reversion. 33 bucks, as long as it's above 33.80, it's looking okay. So I would look for it to stick around the mid 30s. If it can't hold that, then it's going to come back down to 33 and probably test that weekly momentum pivot. But that's where I'd reevaluate it. So basically to the upside, watch 39 to 40 bucks. If it can break out above there, all good. Probably going to go on a little bit more of a run. And you want to see it, put it in higher lows from higher up. Gives it more room to mean revert. But that would be very good for the weekly. So the weekly's ready to turn. What's the monthly looking like though? Monthly's probably down below 43. So again, above, like, if it can crack like 40 bucks, then keep an eye on 43 to 45 bucks or so. Give it like that $2 cushion if it can close above there. The reason why I'd say give it that $2 cushion is you're looking at around the upper second standard deviation on the monthly here. I caught it, by the way, just intuitively, just having a good understanding of when I looked at that daily, the structure is sideways just like the previous one. So we're looking at, monthly could set a low, a technical low on any closures above 38 bucks, currently trading around there. But realistically, you need to see 39 to 40 bucks. So the open of the candle from September opened at 39.84. You need to see that recovered to then start raising your targets to around that 43 to 45, and then we start looking up further again. Otherwise, I wouldn't be surprised if this came back down to try for like a higher low, and then come back to it later. Quarterly's looking good. Spike off the basis. I do suspect it's doing the same thing with the cross down initially at 39 bucks. See it above 39 bucks, 40 bucks. Guess what? Excuse me, probably headed up. Hope that helps, bud. You let me know if I covered what you wanted me to cover. And then we're going to move on to Sol. And that's probably going to do it for me today. Excuse me. Sorry. Okay, good. Thank you. All right, cool. No problem, buddy. All right, let's look at Sol. Okay, so Sol is met our criteria for a possible breakout on the daily. Next big area, we still have to take it, one step at a time. Just above here, 60 bucks at this little consolidation high. So this swing high up here, it's currently trading around this swing high right here. So above this swing high at 55 bucks basically. Then we look to about 59 to 60 bucks. Above there is an order block to be aware of at the low side of 60 bucks, high side of 75, which of course is the next big area. So 75 bucks is the one to keep an eye on if it can close above 48.40. The weekly supports this as well. So you do want to see Sunday's closure come in above here as well. You don't want to see rejections, spikes up that come back down. And we could see dailies that shoot up there, but 75 bucks is the next big destination. You could even call it 75 to 80. There is a close open over here. Above there's another bit of resistance on a close at about 93, and then we're taking the highs as the next big area between basically that close open and the actual swing high at between 115 and 150, 140 to 150. But right now, closing above 48, this was the criteria that we talked about. Freaking lift off on BBWP, looks great, 83 over 49. It could get some more violent lower term time frame pullbacks, but if you see it close this weekly, if it does not get there on the daily before, then so the criteria would be that the daily doesn't spike into 75, 78 bucks. But if the weekly can subsequently close above 48, 40, 50 bucks or so, the next big destination is 75 to 80 bucks. So that's really where we're looking. Hope that outlook on Sol is helpful. And on the weekly, I mean, this thing could still mean revert all the way back to like 35, 40 bucks, and it's fine. No big deal at all. I mean, shit, above 25 bucks on the weekly, it's fine. I wouldn't want to see that. 33 to 35 is going to be the pivot, possibly even 40 at the end of this week. So upper second standard deviation is kind of where you want to see this continue to close to maintain its expansion to the upside. Upper first at worst. So basically you got 33 to 43 bucks is where you want to see things maintain on any big pullbacks. Other than that, it's up and to the right. Below there, then we're looking for mean reversion all the way back to this high here. I would not want to see this tested again, to be quite honest, around 27 to 30 bucks. You want to see the breakouts hold, specifically this one over here at 44 to 45. So this weekly breakout at 44, 45 bucks, that holds up. Looking good to keep testing higher, and back tests there are perfectly bullish. Below there, keep an eye out for 38 to 40, and then 30 to 35 or so. ETH BTC, yes, I did mention this to remind me. Might have been the week before. I don't really remember. There we go. Yeah, lower lower second reclaim, right? It ran the lower first, but so far has not recovered it. The lower first is at 0.56696, so basically 0.57 million satoshis or whatever it is really what you want to see closed above on the weekly. Above 5.3 million, it's fine. It's going to turn back up if it can close above there at the weekly. And then we're looking structural, right? We're looking for this close open lower low that got broken down from, and this was at basically 6 million satoshis or so, and then it's the basis after that, about 605. Above there, we're looking at 6.1 to 6.2. Take out that high. It's going to be in the cluster of lows over here and consolidation. 6.4 to 6.5 million, or 0.64 to 0.65 BTC is kind of where I'd want to see it recover, and then we come back to it later. Weekly is looking good to turn up though if it can close here or higher. Monthly, still pressure down below 6.3 or 0.63, and then quarterly is not even enough to populate. But yeah, daily's getting a little stretched out, but above 5.5, it's good. It's trying to reverse structure. I would not be surprised to see this pull back from here. Maybe it tries a little higher, but I wouldn't be surprised to see it pull back further from here. Maybe come back to 5.4. And that's going to be it for today. Let's go ahead and turn on the... Okay, Shell, take care. Let's go ahead and turn on the 30-second degen chart, and I want to tell you all that I appreciate you hanging out, as always. And for those of you that stuck around over in the not public chats, for those of you that are also preparing for your exams, we've got more and more. I can't even count them all anymore. We've got a bunch of FINRA Series 24 and 57 that are rolling through. They're just in the beginning phases. Congratulations, guys. I appreciate you all hanging out on a Friday. And for those of you in the public chats, such as YouTube and Twitch, I want to thank you for hanging out. Everyone, please have a wonderful weekend, and you have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And as always, please stay safe. We live in crazy times in a crazy world where you should own as much Bitcoin as possible. Not financial advice, but probably pretty sound advice. All right, everyone, have a great one. I will talk to you again on Monday. I should have some Bitcoin in 60 seconds videos out. Maybe later today. If not today, then on Saturday. And of course, I should have a Sunday weekly video for you as well. So you guys take care. Enjoy your weekend. For those of you in the United States and abroad, happy Veterans Day. We appreciate all of you. And, enjoy your day off. Go get your free stuff. You deserve it. And enjoy your weekend as well. So take care, everyone. With all of that said, Landy out.